In Chapter 2, we're going to be keeping up with our account balances a little differently than we did in Chapter 1. We're going to be using a T account. Every account has its own T. Every T has a title, a left side, and a right side. And this is how we're going to keep up with the increases and decreases in each account. Here's an example of a cash T account. The first thing you do to get a balance in an account is foot each side. In accounting, to foot means to add down. So we're going to add down the left side and get 3,500. We'll add the right side and the footing is 3,130. So now it's time to balance out. The way we do that is we subtract the amount on the left side of the T from the total on the right side of the T. So we get 370. Okay, so 3,500 is greater than 3,130, so the balance of the account goes on the left side of the T. We're going to increase and decrease accounts with debits and credits. Debit just means left and credit means right. Neither of them mean increase or decrease because some accounts are increased with debits and some accounts are increased with credits. But after all debits and credits have been entered, they must equal. And that way we know that the accounting equation is in balance. So we don't have to worry about saying assets equals liabilities plus owner's equity anymore. If debits equal credits, we know that our accounting equation is in balance. Now, there are 3 account types that are increased with debits and 3 account types that are increased with credits. Assets, expenses, and drawing are all increased on the left side with the debit. Liabilities, revenues, and capital are all increased on the right side with credits. My advice to you when you're learning your debits and credits is to learn the 3 accounts increased with credits. Then you know everything else goes up with a debit. So your accounts payable account, your liability, is increased with a credit. Your revenue, your service fees, that is increased with a credit on the right side, and the capital account is increased with the credit on the right side. These are the only 3 account types increased with the credit. All assets, all expenses, and the drawing account are all increased with the debit. Here's an example of how debits and credits work. If we purchased office supplies for $800 cash, we're going to do the same thing we did in Chapter 1. We're going to pick out the 2 accounts affected. So in this case, if we purchased office supplies for cash, cash and office supplies are the 2 accounts affected. Okay, so if we've paid cash, then cash is decreased. If we've gained office supplies, then office supplies is increased. So now we need to enter that in the T accounts with debits and credits. To increase office supplies is an asset, so we need to enter the balance of 800 on the debit side. Since cash was decreased, we need to enter the 800 on the credit side. So now we have a debit to office supplies and a credit to cash for 800. So our debits equal credits, so we know this transaction keeps our accounting equation in balance. Here's a second example. If we purchased equipment on account for $3,000, we figure out the 2 accounts that are affected are equipment and accounts payable. Equipment was increased because we purchased more. So to increase an asset account like equipment, we debit. Accounts payable was increased as well. And remember, liabilities, accounts payable, is one of the three accounts increased with a credit. It's a liability. So we enter the $3,000 on the credit side. So we have a debit to equipment and a credit to accounts payable. Every single transaction will have at least one debit and one credit. And you have to make sure that your debits and credits are in balance. To ensure, once we have entered everything in our T accounts, that the debits and credits equal, we're going to use a trial balance. Okay, the trial balance is a list of all accounts and their balances. It's really simple. There's nothing fancy about it. It is not a financial statement. It's something used within the company just to ensure debits equal credits. And that's its sole purpose. Okay, here's an example of a trial balance. Notice we've got the account listed down the side. We've got their balances over on the right. Notice that cash, accounts receivable, supplies, prepaid insurance, and delivery equipment are all assets, so their balances are on the debit side because they're all increased with debits. Accounts payable, capital, and the revenue delivery fees are all on the credit side. Remember, these are your three accounts that are increased with credits. So once we total the debits and credits, we see that they equal, so we know that our accounting equation is in balance. Now, the accounts should be listed in the order of the accounting equation on your trial balance. You'll be preparing your financial statements using your trial balance, so it really helps if everything is in order. So the first accounts are your assets, and then your liabilities, capital and drawing from owner's equity, and revenues and expenses from owner's equity. So if you can just remember your accounting equation, then you can remember the order that your account should be in.